Hey, thanks for joining me. Today, we're digging into something that, let's be honest, affects every single one of us: the price of food. We're going to connect the dots between what's happening on farms and in shipping containers all over the world and your next trip to the supermarket. All right, let's get into it. I mean, you're not imagining it, right? One week it feels like everything's shooting up, and the next, maybe you spot a good deal. But what's really going on behind the scenes? Well, the story for 2025 is this fascinating tale of two totally different shopping aisles. And this right here is the big puzzle we're going to unpack today. On one hand, the USDA is reporting that cattle prices are hitting all-time highs, but then you walk over to the dairy aisle and prices for milk are actually expected to drop. So how on earth can two staples be heading in completely opposite directions? To figure that out, we've got to start at the source, the farm. See, to get a handle on the price, you got to look at the supply first. The story of what you end up paying is really a story about who is producing what and just how much of it they're making. And right now, that whole global agricultural map is, well, it's shifting. So first up, let's talk milk. According to a big report from the OECD, it looks like the world is on track to produce more of it, a lot more of it, over the next 10 years. How much more, you ask? A pretty steady 1.8% growth every single year. And what's really interesting is that this isn't just about having more cows. It's about getting more milk per cow because of higher yields. Pretty efficient. But here's the twist. This growth isn't happening everywhere. Get this. More than half of all this new milk is going to come from just two countries, India and Pakistan. Meanwhile, the European Union, usually a dairy powerhouse, is actually expected to see its production dip a little, partly because of stricter environmental policies. So the big takeaway here is we're seeing a major geographical shuffle in who's making our milk. Okay, now let's flip over to the meat counter because the story here is, well, it's the complete opposite. Here in the US, beef production is slowing way down. The USDA is pointing out that the pace of cattle slaughter recently dropped to its lowest level since 2015. So fewer cattle are going to market, and that sets up a totally different kind of price dynamic. Of course, it's not just about how much food gets made, but where it all goes. International trade? It's a huge piece of this. And right now, some new appetites in some pretty unexpected places are totally shaking up the flow of meat around the world. Let's take a look at how that's playing out. So while we tend to focus on these massive markets like China, recent export data shows that some of the most dramatic growth is actually happening in the Caribbean. It's being fueled by a big rebound in tourism and local economic growth, and the demand for meat products in the region is just surging. It's creating these new hotspots for exporters. And this just shows you the point perfectly. I mean, just look at Jamaica. A mind-blowing 293% jump year over year in the value of their meat imports. That is just explosive growth. And other markets like Trinidad and Tobago are also seeing these massive jumps. These smaller markets are becoming incredibly important. But, let's keep it in perspective. The big established players, they still dominate when it comes to sheer volume. The Dominican Republic is still the single largest market in the region by a pretty wide margin, importing over $12 million worth of meat in just the first 8 months of 2025. Okay, so we've seen supply is up for dairy, down for beef, and trade patterns are shifting all over the place. Now, let's do the important part. Let's connect all of that back to the price you actually see on the sticker at the grocery store. This quote from the USDA really says it all. That slowdown in U.S. beef production we were just talking about, well, here's the direct result: record high prices for cattle. It's a classic case of supply and demand, right? Lower supply leads to higher costs, and those costs inevitably get passed on to us. But for dairy, it's literally the flip side of the coin. The USDA has actually revised its milk price forecasts downward for both 2025 and 2026. The reason is super simple. They're expecting higher milk production. With more milk flooding the market, both here and around the world, the price for farmers and eventually for us goes down. But here's what's so interesting. Just because prices are lower for us doesn't mean it's all smooth sailing for the farmers. This chart shows what's called the dairy farm margin. That's the gap between the price they get for their milk and what it costs to feed their cows. And as you can see, that margin is getting squeezed. So even as production goes up, staying profitable is a huge challenge for these dairy farmers. Okay, so we've got a pretty good handle on what's happening right now. But what's coming down the pike?
The world of agriculture is just full of uncertainties that could totally change this entire picture in the next few months and years. Looking ahead, there are a few major wild cards that could really disrupt these trends. These are the things that analysts and farmers are keeping a very close eye on.
That OECD report points out a few big ones to watch. Stricter environmental rules could really limit production in some key regions. The rise of plant-based milks and cheeses could cut into dairy demand faster than anyone expects. And of course, you can never forget the risk of animal diseases, like the recent cases of avian flu jumping to dairy cattle, which can just wreck supply chains overnight. And finally, any big changes to trade deals could instantly redraw the maps we've just been looking at. And all of this really brings us to the big final question, doesn't it? The world needs more food, no doubt, but we also need it to be produced in a way that's sustainable, and it has to stay affordable for everyone. Juggling those three things, demand, sustainability, and affordability, that is the fundamental challenge that's going to define the future of our global grocery bill. Thanks so much for watching.